I think it's certainly good to see some small bits in inflation data, but overall, I would say the data is not much a relief to the deflation concerns, because the overall reading are still very, very low, right? CPI inflation was only 0.5%. PPI was still negative. So in the consumer space, actually, besides the poker inflation and the seasonal travels, we really don't see much organic momentum in demand. Property sector is still struggling, not out of the woods anytime soon. And in the industrial space, both, I think, overcapacity and insufficient aggregated demand could continue to weigh on the prices. So with that, actually, for the full year, I still see, an annual CPI around 0.5%, and PPI around the negative 1.5%. So GDP deflator, which is a measure for the overall, price or inflation level for the economy, could stay negative for the whole year. So some healthy organic inflation could still be absent in China. Emily.
We're looking to data next week. We're going to be getting the latest house prices as well as the monthly activity indicators. Can you give us a little bit of a forecast on what you expect to come through next week?
Yeah, so our tracking of the high-frequency data for July actually continue to show that the momentum for the economy is still softening. So overall, I think we for next week, we don't expect to see, an obvious turnaround in terms of activity data. And this is already on top of the weaker than expected Q2. So in this sense, I think, I think for Beijing, the official growth target at 5% could be at risk, I think, for this year.
Now, Citi has cut China's 2024 GDP target to 4.8%. Can you share with us the reasoning behind that?
Yeah, so this downgrade actually was done 2 weeks ago, right? But I think it still represents our latest view. We basically, as I just said, we basically think a 5% official target is now at risk, and realistically expect a growth around 4.8% for this year. And I think there are two considerations. One, as we just discussed, I think Q2, we already missed the expectation by a great margin, and the momentum for the whole economy is still softening. But more importantly, actually, I think the policy efforts would remain very, measured, I think, for the rest of this year, right? We saw some renewed measures trying to support growth after the third plenum. For example, the supplies policy rate cut by the PBOC, the expansion of those trade-in program to support the durable consumption. But overall, I would say we are still in this reactive and targeted easing mode. Confidence weakness has been lingering among consumers and the businesses. So policy actually really needed to exceed expectations so as to stabilize expectations. But I don't think we see such a policy pivot in the near term.